Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So actually here you could see the same impact of the really poor retail sales numbers that we've got, but at the same time you could see that on the gold market reaction was significantly smaller than on the euro currency, and the bearish context that we're considering here looks much better than on the euro currency. On the euro currency it is still valid, but market right now is flirting with the invalidation point of the short-term bearish context. Other words speaking, euro has started dropping either immediately or the context will fail. But on a gold market still has some room to fluctuate and keeping the bearish context intact. So on a daily chart everything looks reasonable. Market shows reaction on the support area, which is the COP and the 50% support area. Reaction stands very small, so absolutely normal for touching of the COP extension. So it's nothing problem here. On other markets such as dollar index, interest rates, you also could see some minor pullback. If you take a look at the dollar index and the interest rates, you also could see some retracement there stand. So particularly speaking on interest rates, they are turning up once again. While on dollar index, depending on how market will close today, we also could get the bullish grabber. So potentially that could be some additional backwind for the gold market as well. Today we also have important numbers, maybe not as important as retail sales and CPI. We will get PPI later. And what I think interesting might be, first of all, expectations of the consumers from the Michigan, and also Michigan inflationary expectations. That might be really important. We also will get the bulk of the data from the real estate market, but it's more or less everything clear there. But concerning the expectations, this might be interesting and might become the driver, as for Forex market as for gold. So on lower time frame, on 4-day frame chart, I do not see really big problems with the current butterfly. We've got the pullback, market consolidating around the levels that we have specified, right, the same lows that we already mentioned right there. So I suppose that this is an area where if you would like to go short, this is the point where you have to make the decision based on this short-term bearish scenario. If market will not start dropping right from there as a result of the data or in general and start moving higher, erasing this recent collapse, that could lead for more extended upward action. So other words speaking, everything stands the same as in the euro currency. With this short-term bearish context that we have, market has not lots of room to fluctuate and has to either follow this context or probably this context will be over and we will have to consider something else. But if, as I said, we will not get downside continuation, so probably it means that overall the short-term context will be finished and market will start showing something different, starting from the deeper upward bounce. Then we will see what will happen. That explains why this point where it stands right now is very important. I would say it's critical for this short-term bearish scenario. On the hourly chart, market mostly is wobbling around the levels that we have specified. If you remember, yesterday we talked about 1,000, where previous low stand. It's also OP target. Here was retail sales impact. That's why you can see that reaction was more significant. But at the same time, this next level that we were watching around 2010 approximately, which is the XOP and the confidence, and we treat it as vital area for a current scenario. Is this preferable for the gold to stay below it to keep chance on the bearish continuation immediately? And the attractiveness of this moment stands in two moments. First of all, as I said, that's actually this is the last strong level for this short-term bearish context, and market already here. So it means that if you decide to sell, you could place relatively tight stop, so your risk will be not very big. You probably know already that usually I call it as a culmination points. So that's actually what we have on the gold. No long positions by far, because market keeps well at bearish context. Market stands in the point where the bears have to make the decision whether you would like to take the position or not, because this is the best from the risk-reward point of view option. And let's hope that numbers that we'll get later in the session will support the bearish tendency. If all the stuff still will fail today, then probably we will have to consider some bullish patterns next week and more extended upward reaction. So that's actually breakout of this level just suggests that the short-term bearish context is over and we will have to search something else. So that's what we have on the gold.